Hi and welcome to TCM Education. The topic of this video, as you can see, the mentor's guide to building real wealth. Now, everybody that started or is in the process or is already trading has one dream. That's why we trade. We want to get rich as fast as possible. Trade from the beach, preferably drinking some a pina colada or some other exotic drink, and the beach should be in Thailand or in Hawaii. Obviously, anybody that's trading knows that this is BS. Trading or day trading is a job. You need to come to work, prepare, apply yourself, and if you make money, then you can go on your vacation, and that's it. It's a job like any other job. It has its drawbacks, it has its benefits. Let's talk about the plan, which is super important to anybody that's day trading. Now, as a day trader, you are facing different scenarios every day. Some are more familiar to you, others are more complex. Sometimes the market is gapping up, other times it's moving down. There are days where it's not moving at all. Just remember yesterday. And so every day we're facing with a different scenario. That's not the case with most businesses. Tesla produces cars. I assume that the environment in the factory is the same every day. It's probably the same if you are a restaurant owner, although there's always something that can go wrong. Sometimes it's the refrigerator, sometimes the workers are not coming. So every business has its own pitfalls. Now, as day traders, we want to make our job as easy as possible, as stressful, as less stressful as possible, and there is a way. Okay, so I've been trading for almost 20 years alongside great traders, and sometimes people ask me, what do you learn? So from each trader you can learn something, but overall the concept, the way you trade is very, very personal. It's like a restaurant. Every restaurant has its own persona based on its owner. Unless you are McDonald's, then all restaurants are the same. So how do we make this work? First of all, let's imagine that we're constantly trading with the same position. I'm going to give you a hint. Because you're trading the US equity markets, you have at least $25,000 in your account. To be a day trader, meaning you have at least 4 times 4, $100,000 of buying power. And obviously if you trade in the US you need more, but let's say only 100,000. So each position is limited to $20,000. So you have at any given time enough money to be in 5 different positions at the same time. So this is a good thing. Now, if you trade with the same position every time, you know already that this in your brain that, okay, this is taken care of. I know exactly how much to buy in terms of money. But what happens, one stock is $5, another is $200. And again, the math is very simple. Some platforms, and again, there are so many platforms today that I cannot begin to comprehend and understand what's going and how, but there are some platforms where you can basically say to the platform, I'm going to buy $20,000 worth of Apple. The price of Apple is $200, and therefore Apple is 100 shares. And if, in our example, SMR, the price of SMR is $40. So $20,000 divided by 40, that's 500 shares. Now anybody that day trades knows that 500 shares is not a really big position, nor is 100 shares of Apple for day trading purposes. For investing, that's a different story. Okay, so that's taken care of. The math is very simple. So you are like I said, you want to buy 100 shares of Apple, you know exactly. And if the price is $67 per share. You have your calculator, and after a week of doing the same math, you don't need anything. You know that $20,000 is 130 shares. Sorry, that's 230 shares of a $67 stock, and that's how you work. And if you make a mistake, it will happen once, and you'll fix it. Okay, so that's regarding.
Want to stop guessing and start trading like a pro? Join our one-on-one mentorship program. Learn high-impact, low-risk chart patterns, risk management, and experience with live execution. Get expert coaching and one-on-one training and support. Get your day trading green with strategies that work. Sign up today. Spots are limited. Email thechartsmaverick@gmail.com.
The position. Now, why position size matters? Because as day traders, we want to take advantage of the liquidity and volatility of the US equity markets, and of course of the leading stocks. So by definition, we're going after the most liquid and the most aggressive, or stocks that have the chance of moving a lot intraday. This is our goal. I mean, our goal is not to enter a trade at 40 and exit at 47 cents. The goal is to look for a stock that where we enter the trade at 40, and obviously try to get it to 44, maybe 46. I'm not exaggerating, of course. Let's say 42 will be fine. So from 40 to 42, that's $2. In terms of percentages, it's 5%. So 5% on a $20,000 position is $1,000. Aren't you happy to take $1,000 of profits if your maximum risk is $200? Now, when I say maximum risk is $200, who decides what is the risk? Now I'm getting to the second part of this equation. If I'm decided to go for $20,000 per position, and I said it's because I have $100,000 worth of buying power, and at least $25,000 to $30,000 in my account. Now, if I'm losing 1% on this position, okay, basically I'm losing 1% of my account. That's the worst case scenario. So looking at this worst case scenario, I'm thinking, okay, can I bear with that as a day trader? If the decision is yes, I'm fine. I can trade $20,000 per position. If I cannot, okay, I cannot bear losing 1% per position, I will have to decrease my position and trade $15,000 per position or $10,000 per position. But for the sake of argument, because we want to be consistent and reasonable, I don't think that a trader that loses 1% of its account per position is in any problems, okay? Worst case scenario, you lose 10 trades in a row. That's 10%. You're going to make eventually a trade of 5% or 2 trades of 3%. So that's I think that's very logical. So why position size matter? Because after all, you are working, you want to get paid. So what is a reasonable pay? Again, you'll ask 100 people, you get 100 answer, but I hope that after this video it will be kind of reasonable what we are trying to promote here. And this $20,000 1%, or $50,000 per position 1%, or $5,000 per position 1%. But if you want to make a living and you're working 6 hours or 5.5 hours per day, and this is work, you need to get paid. So you cannot take small positions, because you can if you are a beginner. So the blueprint for this $20,000 position is that you know already that your worst case scenario is $200. Now, how many times you're going to enter a trade and your worst case scenario is going to happen? Let's say you're an awful trader. 50% of times, keep in mind, it's the worst case scenario. It's not like you enter the stock at 40 and immediately it drops 40 cents. There are obviously other scenarios where it goes up 40 cents. And again, this is something that will help you get over the psychological fear of losing, because if you already accepted your loss from the beginning, that's fine. You already know what is your worst case scenario. Now if you trade with different sizes, with different stop losses, you'll always hit pitfalls. I know, because I did it myself for many years. Okay, now this concept where you trade with the same amount and exposed to the same risk is business-like, because this is how a business works. When you are a restaurant, you know how much you pay for the ingredients and how much you're going to charge for the plate when it reaches the customer. This is basically what we are doing. We don't know how much we're going to get paid. We know how much it's going to cost us. Worst case scenario, each plate is going to cost us, in this 20K scenario, $200. So we'll need to charge more from the market. Now, is the market the best market in the world or not? Is this the best trading environment ever? The answer is obviously yes. We're trading the best equity market ever. Now, how do you manage a position? Okay, this is something that, again, it's very different, as opposed to anybody can decide. We can decide together, $20,000 per position, 1% of risk. But how do you manage a position? You can see in our example here that the stock is basically breaking here the entry at 40.40, then it moves higher, then pulls back, moves higher, pulls back, and the end of the trading day it's at the highs, and as a day trader you close it, and you should do it, because look what happens on the day after. But you don't know what's going to happen on the day after. On the day after it can gap up 5%. In this case it gap down 10% or whatever. Again, we are day traders. We're going to take money off the table by the end of the trading day. Okay, that's the concept. Now, how do you manage? We cannot get into how is the strategy here, but our strategy that we are teaching in the mentoring course is to let the trade run until the end of the trading day. And now, why is that? Because we have the benefit of trading the best stocks among the best stocks. So we're focusing on the best scenarios, best stocks in the best market, in the best time. We are at all-time highs, and that's what we want to, capitulate on. Trade the best stocks, let them run. There are plenty of scenarios. You can trade plenty of positions per day. You're not limited to trading one position. Like I said, you can be at 5 positions at the same time. Obviously, you're not going to do it. You're going to be at 1 or 2, maybe 3 at the most. Okay? But if you capitulate only on one, okay, and one is in this case an 8% winner on a $20,000 position, that's 16 grand. That's it. I mean, let's say that all other positions are losing, okay, you're still going to end up very much in the green. And maybe on a given day you can deliver 2 winning trades. That's what you should do if you're running a ship that's built on consistency. You're taking care of business and you're not worried about losing, because your worst case scenario, it's already built in. Now I can tell you real life mentoring stories, how I entered the trade at 100 and it went to 105 after 2 hours, and I exited at 150 cents. And the challenges, the mental challenges that you are possessed with when you're taking 20% of the pie. So you're serving a dish to the customer, and the price is let's say $100 per the awesome dish, and you're getting paid 20. That's impossible to make a living out of this concept. Okay guys, I hope it was illuminating. Thank you, and we'll see you in our next video.